Alrighty, guys, I'm back. This video, we will be, first of all, reviewing the trades of the day, pretty much. I had, well, still am having some sort of slippage issues with stocks and placing orders, so I'm going to look into that a little deeper. For some reason, I get entered 1% away from all positions, which is weird. We're certainly going to be looking into that. That being said, we can at least look at forward tested trades, and I was able to get positioned in these, but just with a horrible position. So that being said, you can see the trades of the day. We have this wonderful guy right here, which you guys saw me select it live, set it up live in the last video. Same with this guy. You guys can see where I got entered here, right as we came out of this kind of bearish move. Same with this guy. I think this is a loss. It is. Certainly is a loss. This guy's also a winner because that's all we do around here. Continued moving, came back. Yep. Beautiful winner. Lift was doing okay, but it kind of fell off. No entries really provided. We just kind of fell down. TXG. Yeah. No entry provided. Still setting up here. You'd probably drag this down a little bit. This guy, probably no entry. Actually, yeah, entry, but break even. Didn't do anything with that one. Yep, this guy, probably a break even. I mean, we have a lot of excellent positions here. So, no doubt about it, our analysis is on point. Our deliveries are, for the most part, on point. Now, let's assume I would have gotten positioned well. No entry on this one. Let's assume I would have gotten positioned well on these stocks, for example. Well, we'd be up. We'll just do quick math. We'll say 2, because that's probably where we might. I mean, it might continue going. So 2 plus, we'll say 3 is 5. Minus 1, 4. 4, 8. Oh, this probably looks like a 1. So 9. We won't count this one. That was from yesterday. Well, there you go. Plus 9R on the day. Now, assuming, I mean, a relatively small account, especially for personal funded, 100K, that is 1% risk is going to be 1K per trade. You just made 9K a day. There you go. Simple as that. Imagine making 9K in a day. Like, in what other realm do you do that? And then tomorrow, it's going to be the same story, and the day after. So 9K a day is very, very close, and that's 100K, guys. That's a 100K account. Now imagine a million. Well, you just turn that into 90K a day. It's unbelievable. Unbelievable what you can do for yourself. There you go. And it's with stocks, so they should be very liquid. I'm gonna identify, you know, some issues I'm having still, but that's what this week is for. It's to continue backtesting. So, yeah. Oh my goodness, look at how weak SPY is compared to what we're trading. We're trading. Do you guys see why I choose the assets that I choose? The way I screen for them too. It's a long process. Like in the morning, it was maybe a 30-minute process to go through 90 plus markets. It was about 90. And then you're set for the rest of the day. You're set for the rest of the week. Like these are to continue delivering if you've already selected them off your list. So maybe every 3 days you just check up on your list and you're good. Because even looking at a 4-hour, building out of this didn't build out in a matter of a week, a day. This built out in a matter of 200 and 300 days. 233, yeah. And even if you would have like started looking at the screener here, this is still 21 days of nothing until you get your sign of strength and then you're in. So yeah, you're going to be on the sidelines for quite a bit. But what this video is actually going to entail and what I want to focus on right now is actually going to be refining the system. We literally created an entire system in a matter of 2 hours the other day, 2 days ago. And here you have it. Here's like our raw data collection. So guess what we're going to go do now? We are going to separate these screenshots into their own respective folder. So all the 30 minutes are going to be stuck together with the 30 minutes, all the hourlies, all the, or 4 hour and all the 5 minutes. And then we are going to go from there. So let me get started on that and I will show you guys where we're going with this. All right, guys. So here we are. We have our two systems here. Oh yeah, this is a new like Notion journal. You can use literally any editing journal, but this is what I'm going to start off doing. We're going to add like a header, probably a H3, and we're going to do 4 hour context, and that's it. So next, what I'm going to do is hopefully I can zoom in on, well, I guess it zooms in on both of them, but we're going to take this guy, put it here. Anything that says 4 hour. Is this 4 hour? Yep. Anything that says 4 hour. And so we're going to go, actually, we're going pretty quick, so I might not have to pause this. I don't know what time frame I'm looking at here. This is also a 4 hour. 4 hour, 4 hour, 4 hour. Gonna copy all these and then delete the little divider bar here. If I can find it. Come on. Okay. Got rid of that divider bar. I don't know if I got the right one or not. We're almost done here. Sorry for the delay, you guys. You guys can skip through it if you'd like, but we are effectively almost at the bottom. 4 hour. Make sure we have no 4 hour left here. It's a 4 hour. 5 minute, 30 minute, 5:30. Perfect. So now what I'm going to do is I'm just going to simply Control Z all these changes I just did. I wish there was a version editor. So updates 1 day ago, end of data collection. Cool. We're going to restore this version now. So all I pretty much ended up doing is removing all the 4 hours from here, pasting them into here, and then keeping them. So later I can come back and look at the order of each one. So this is going to be easy. This is the context. This is one of the like easier things to look at and analyze. So what I will do right now is create a text box here, which recaps effectively everything. Or here at the bottom, we'll create a new thing called heading. We'll create a heading 1 and do complete analysis. And then we'll do like a H3 context 4 hour. And then here, we are going to, here, let me make it a just paragraph style text. How do I do that? Text. And here we are going to have our notes for this context situation. Okay, this is going to be a little bit more advanced because now we're diving into the nitty gritty of what it means to actually optimize, create, and use a system. So here we go. Remember, this is just the context. What do we want to see happen? Or what have we seen happen for money to come into this market? Well, we see money was below the MAs. We had some sort of medium in the middle of some range where price came out of it very strong, came back to the MAs, and then proved itself. Now, we couldn't trade here because there was red news. There was earnings, so okay, well, there's not much to take away from this. Price can previously be below MAs and build out. Okay, like that's not a lot of information, right? Relatively shorter term. What I mean, sorry, what I mean by relatively shorter term is if we were to zoom out on STX, which let's go, STX, 4 hour and zoom out, this is where we start our back test. You can notice one thing, and it's that this entire area was just going back and forth, right? And then we fell back down, but in a relatively short term, which is relative, like this is short, in a relatively short term, we were able to come out of it with immense strength to continue following it along. Do you guys see that? So now we're going to go in and take note of that. Price can be below MAs and build out with relatively shorter term. That is something that's actually one of my rules. Like if you go look at the assets I'm following right now, none of them are going to be in this condition. They're all going to be in this fully delivering market condition. You see that? I'm not going to be trading, like, once again, this is a good example. We could be trading this up, and this is the exact same thing as STX when it first started coming out. So above the MA is pushing higher. There's nothing too significant in this image that stands out. Yeah, nothing too significant that stands out where I want to take note of it. Like, yeah, we baselined at the MAs and continue pushing higher. Cool. Go on to the next. These next few trades, they took place like very high up. Accumulation momentum 1, 2, 3, probably 4, or flush out and accumulation, something like that. Nothing too crazy, but one thing to note about the 4 hour, I'll probably say that, hang on. Sorry about that. Yeah, so the 4 hour, given a longer period channel down on 30-minute on validation, this can be reflected on the 4 hour. Okay, what I mean by this is on the 30-minute, oftentimes you'll have these really long regression channels. And let me show you, we actually have a market that's doing that right now. I think it was Rivian. Rivian had this like really long channel. Oh my goodness, yo, come on now. Come on now. Come on now. You guys are seeing this live. You guys saw me select this market this morning and say, hey, I want to buy it when this happens. Waited for my alerts to go off. What happened? So now if I jump up to the 4 hour, we're getting something similar. We're getting this channel also being reflected on the 4 hour, which is also reasonable moment to buy. Same here. if we jump down to a 30-minute, it's probably going to be a very, very, very messy channel down, but it'll be reflected here. And we get our channel down, whether it be this guy down, whether it be this guy to here, which is exactly what we just had, came down below the MAs and then got bought up, or if it's going to be something like this. Either way, it is okay for that to be reflected on the 4 hour. Okay, we continue. Nothing crazy here. Literally nothing crazy. It's the same thing. And we really don't care too much about models. I'm not taking note of anything particular here. And that's why the 4 hour, the context is so easy. It's just, you want it going up. That's it. With immense strength. The other thing, fully delivering market, no sideways at all. That's like a super necessary, like that will literally define your entire system if you're trading here versus trading here. And you want it moving from the MAs cleanly. Expansion and contraction to the MAs. Super simple, but super important. You don't want it dragging up. I guess here it kind of dragged up and you did get a good trade, but it was clean and it did expand. So it's not even a good example. Like right here, probably not. Good expansion, likely not trading this. Same thing. We see this retracement reflected on the 4 hour as well. So yeah, I mean, there's really no note to be added about that one. Regarding this guy, yeah, I mean, there's nothing significant here. With retracements back slash fractal rex on the 4 hour. Wait for price to hover over the MAs and start building higher. This isn't too important because you'll see it's also reflected on the 30-minute. So I'll show you guys. Here, ooh, this is going to be an important screenshot. So how do I want to phrase this? It's how do I even explain that? It has to do with no sideways at all. If a market starts to fall, starts to reaccumulate, but fails to continue delivering and somewhat falls back down, stop following. Likely a start of a little more chop. Simply wait for sign of strength. There you go. If a market reaccumulates or starts going up, but fails back down, maybe at this point you can start looking at it again, maybe. But even then, even at this point, yeah, it'd be okay because technically we didn't fail back down. But then we broke down even lower. At this point, stop looking at the market. Wait for your sign of strength. And that's what we did in this market. Okay? However, if the market puts in a sign of strength, yet falls down again, this is now a larger chop area. Stay out until you have a relative range sized sign of strength. What I mean by this is, in this screenshot, we thought, and I covered this in the video, this is actually very important to keep you level-headed. We thought, okay, at this point we got our sign of strength, we're good to continue looking for longs. Then what happened? The exact same rule that we stated here. If a market starts to reaccumulate but falls down again, stop following, it's likely the start of more chop. We'll keep it that way. Simply wait for a sign of strength relative to chop size. This is important. Always relative to chop size, and I mention it several times. However, if the market puts in a sign of strength yet falls down again, this is now a larger chop area. Stay like these two go hand in hand. This is almost a recursive method of this guy right here. So we think we're getting out of the. We think we got our sign of strength and ready to continue going higher. What happens? We do until it fails back down. What do? We stay out of the market. It literally says, but falls back down, stop following. Why? Because this ain't this. If the market has money behind it, it is going to continue, period. If it doesn't, that's your answer. Why would you keep throwing money at it thinking you're gonna figure it out? No. If the market fails the first time, stop watching. You get your sign of strength again. Start watching. Oh, falls back down. Stop watching. Now you get an even greater sign of strength, and you're like, now this is, and what I mean by relative to size, notice this sign of strength right here is relative to this size of region. But now we fell back down all the way down here. So now the area we're looking at as chop is this entire region. Well, is this relative? Yeah. We pushed off like way beyond any of the highs. So at this point, I'm like, this is our sign of strength. Lo and behold, it wasn't. And we fell back down. So what happened next? Same thing. Look at this. If a market starts to reaccumulate, which we did, but falls back down again, stop following. What did we do? Stopped following. It's going to indicate more chop. Simply wait for an SOS relative to that chop size. I wish I had a drawing tool here because this is, can I paste this in here? I cannot because it's too big. But can I go in here and do something like this? There you go. Okay, so this is your chop. At first, where's my drawing tool? At first, this was the chop we were undergoing. That is not a good color. This is the chop we were undergoing. And we got our sign of strength, but we fell back down. Stop looking here. Then our area, I'm going to change color to yellow, for example. Now our chop area is this entire guy. But what is this? Oh, a sign of strength that's relative to the size of this guy. Right? So let me go back to green so I can draw in the box. This was our original chop area. But now we failed and we defined a new chop area the moment this fell down. And then, let me go to red now. Just seems like it would fit, or pink. Now, we fell all the way back down. Stop. Why am I doing red? Okay. Then, dang it. Then we fell all the way back down. What is our chop area now? Including up to here, all the way to this low. Where's our line going to be? Probably somewhere in the center. So now we get a new sign of strength all the way up here. This is sign of strength that is relative to the size of the red box. This, I need to change color again. This up thrust right here is relative to the size of the yellow box, which it should be yellow, not green. And this is relative, this SOS right here is relative to the size of this chop. So do you see how important this idea is of simply knowing when to stay out? It's a different way of thinking about things, but hopefully it keeps it very simple for us to understand. So now when we come back here, all this was ultimately chop. And when the market's playing out live, you don't know if this is your true sign of strength. We fail back down. We get a new sign of strength. This one's it this time. We fall back down. Now we define this entire area until you get to a point where an area is like this, that I'm just staying out. I'm staying out. Oh, This is your sign of strength. Let's get in this, guys. Let's get in this. And boom. This is important. This is important. Very important. Look at what happens. We get our sign of strength. This is where we get a couple really profitable trades. Now, we're not looking at the 30-minute yet. But I keep this highlighted here for us to look at. Because what happens after we build out of this? With our brand new sign of strength, that's relative to the size of this chop. Oh, we're in. Same thing. I'm going to take a step back, go and look at the markets I'm in. Do you see any of that? Do you see any of that? Oh, 4 hour. Nope. Nope. You saw it down here. Let me yeah, let me get rid of this. Sorry about that. You saw it back here, right? Boom. But we never came back down. We continued delivering. So that told me everything I needed to know. Do you see it here? Bad price action here. Like, it looks kind of sus, but here we build back out. And probably I shouldn't be looking at this now that I take another look. Like, this was the only clean up thrust. All these were like, go, come back, go, come back, go, come back. Versus this is go, go, go. Go and look at LLY, for example. This is go, go, go. Go and look at Rivian. This is go, go, go. This, oh my goodness, this is just like go. Look at the 30-minute inside. I mean, we don't have enough history here, but go, come back, go. And look at our expansions. We are up 4R on this guy. Look at this guy. This guy is just like milking up at this point. Lift. Let's go take a look at the 4 hour. We had our chop. So let me walk you through the way I see this market. We come back down. There's nothing to do. In this moment, there's nothing to do, nothing to do, nothing to do, nothing to do. And so as this range is playing out, I'm kind of like in my head drawing a line like this. And I'm like, okay, at what point would I be okay following this market? Oh, sign of strength. Let's go. Period. That's it. And this was a period of 20. This is a month. Literally a month. So on my screener now going forward, what I'll do is I'll go in here and track how long these periods last. 20 days. 20 days. If you go and look at my screener, we have a performance increase of 20% over 1 month. Is this a month? This is a month. Did we go up? Okay, so this is a market we'd be looking at. What is this? This is 22 days, almost a month. Did we go up 20%? That's the market we're looking for. Now, 20% might be a little high. I just wanted to set very strict, like lower the number of markets. So I only got like the super ultra performing ones, and here you have them. That's how I did my watch list this morning. And it doesn't take a fancy tool or a fancy settings in your screener to find these. No, I literally set minimum market caps and performance moves over 1 month, and that was it. Like, that's how you find these markets, the ones that move. And they're like, what's the market cap of this guy? Market cap is $960 billion. You can trade this like, it's so liquid, guys. It's unbelievable. Volume 4 mil on the day. Incredible. Okay. That being said, let's continue. We were here. We underwent our chop, continue going. There's nothing here. We're not worried about models. Well, we are, but not in that sense. We're not counting accumulation momentum break 1. Like, okay, accumulation momentum 1, 2. That's it. Accumulation momentum 1, 2. Yeah, like, and this thing can continue going for a while. And like, even one of these candles is equivalent to 1 day of trading data. So that's why I don't care too much. All it takes is one good 4-hour candle. Same thing. Yeah, I mean, there's nothing crazy here. What's going to be the most interesting to look at are going to be the 30-minute, the validation. Yeah, I mean, there's nothing to take away from here anymore. Probably a good indication. We'll do this. Hint or consider this. A good indication of when chop will end is likely to do with 50 MA. So this long MA I have right here is a 50. Notice when the chop ended, when it got scooped up by price, when it scooped up price, and then it continued going. Okay, so we'll keep an eye out on that. If we get any future chop, we'll look at it. And maybe that could be a good indicator. So at this point, maybe we can start getting involved prematurely before we see the sign of strength per se. But yeah, you can see how the 50 MA started dragging up and then we continued going. Okay. Yeah, there's nothing here. Just continue going. Accumulation momentum 1, 2, 3, 4. Like counts don't matter when you're this high. What am I looking at here? 4 hour. If choppy, when on retracements, wait for your sign of strength. Then this becomes very weird. One final thing is cleanly moving MAs. No weird back and forth motion. So if we look at this final one right here, back and forth, we don't like that. There's no, and there you go. That literally covers our entire 4 hour analysis. Crazy, right? Okay. So now, we just got a new alert on TradingView. Let's go see what it's all about. Gone. 4 hour. What did we have? Crazy amount of chop. What happened? Sign of strength. Ever since that sign of strength, do we have other entries that are available to us? Yes. We had this guy. Didn't fail down. And we had this guy, so that's probably not a good entry. And then, while this technically didn't fail, it's just kind of messy. Dawn isn't looking so good anymore. Because when I go and look at past entries, no entry here. Maybe an entry here, but a break even. No entry here. And that tells me everything I need to know. Would I possibly trade Dawn right now? Probably not, actually. I mean, this was your entry. But you could wait. No, I probably wouldn't trade this right now. GOCOGT. Yeah, I mean, this is just perfection. All right, let me pause real quick. I got some notifications I got to take care of. Alrighty, guys, very quickly. Did just get another alert. We're going to see what this one's all about. Oh, this is interesting. So take a look at this. Now that we just covered 4 hour, 4 hour entered a chop. Why? Well, it started to reaccumulate, came up, failed back down. Stop watching. Is this sign of strength relative to the size of this region? No, I wouldn't say so. I'd say one more candle. And then it failed back down. So our analysis was correct. And then we get another candle. Is this candle right here, the size of it, relative to the size of this region? We're pushing it. Now, if this one would have closed up here, absolutely, we're good. But it fell back down. Then, I'm trying to figure out how to phrase this, but what actually ended up happening is we redefined a new range down here and then pushed away from it. It's not like this range continued existing. No, it redefined a new range below it with a strong push downward to find a new range, and then we pushed away from it. So that's maybe why I'd be okay following this market. Now, looking at it just right out the gate, it's kind of wicky. Looking at past entries, actually, yeah, there's a couple of really good, I mean, just one really good past entry, which would probably be right here. Right here, right here. That's it. So would I be following this market right now? I mean, it's about to be market close, so it doesn't matter, but I could see potential with it. And there's your entry, right? Where's my 30-minute? 30-minute downslope. was right around here. So you're right at the precipice, right at the edge of the creation of a new range, which is right here to continue pushing higher. So that being said, let's take a break because I do have like so many alerts. I'm probably going to cancel all of them and then restart again tomorrow morning, but we get to see them play out. Now we are going to come here and take a look at every 30-minute. I wonder if I can make the zoom larger. Oh, that's cool. We can make it full width. Yeah. That sucks. Okay. Anyhow, that being said, now we have our 30-minute. Oh, that's beautiful. That's so beautiful. I didn't know Notion did that. So now we're going to go through and catch all of our 30-minute best entries. Here's our first one. 4 hour, 30-minute. Here's our next one. Dismiss. Here's our next. Oh, didn't mean to do that. Copy. Here's our next one. Here's our next one. And 30-minute, I'd say, is going to be probably one of the most important. I didn't mean to do that again. And the 30-minute, why I deem it, I did it again. Why I deem it so important is because while you can have a really nice delivering market, like you'll have a lot of markets that say move 30% in the last month, but it's gonna be this 30-minute time frame, for example, that's going to keep you out. That's going to work as a buffer filter to keep you out of that horrible price action. And sorry about the delay. This is a 4 hour, 4 hour, 4 hour, 4 hour. Now, I guess sorry for keeping you guys waiting, but you guys get the idea. We're almost done here. A couple more. One. Go ahead and delete this. Interesting. Okay. And now we know what we're looking for on the 4 hour. We can copy this guy. Go here. Boom. Validation, 30-minute. And hello. Perfect. And that being said, we can go on to just look at our 30-minute. I'm just scrolling up to make sure we only have 30-minute in here, which we do, and it ends right here. So I'm going to make this a full width. There we go. Now we're talking. And we're going to start with our 30-minute notes. What do we see here? Well, let me check some things here. Sorry, it's work-related stuff. All right. So on the 30-minute, generally we want to see a flush back down to the MAs. For entry, wait for flush back down to MAs following a clean delivering market. What do I mean by that? We want to see a strong push up and then come back down to the MAs. Really, that's all I get from this image. Of course, we're going to avoid earnings. Gaps are okay. So assuming gaps are reasonable, it's okay. The flush down must be smooth. And that's it, like not jumpy. So like this flush down, smooth back to the MAs, a nice build up. That's really it. In some exceptions, we can see the 30-minute. We can see price completely break down below MAs. Still showing consistent selling. And you can get involved the moment price breaks the consistent selling. What I mean by that, consistent selling, when can you get involved? The moment we break. And that's where, we got a really good entry. This is going to be a little bit more rare. I think this might be the only example we have in here. So we're not going to collect a whole lot of data on that. But we have seen several examples of this play out even today. Okay. Strong push up, come back down and break. Consider looking at past price action to indicate whether future trades may hold and continue. Okay. Nothing too crazy here. I'm not really taking note of anything. That's really it. On the 30-minute, then we push back up. We pause. Generally, we can anticipate and here, I'll actually write it here. Generally, for clean retracements, generally anticipate 4 to 6 down candles. And for momentum entries, anticipate just a couple. Anticipate 2, pretty much, from my personal experience. Then we rebuild back up. This isn't by any means, this would be a style, this entry right here would be considered a momentum. Okay. Then on the 30-minute, oftentimes we'll break back down. Same rule here. If price reaccumulates, however, fails to continue delivering and falls back down into the range, stop looking for entries. Why? Well, wait for an SOS relative to the size of the range. Why? Okay, this starts falling down. Immediately at this point right here, we start looking for longs. We fall back down. Then we build back up. Then we fall back down. At this point, why are you even like looking at this market? This is like the latest point you should ever be looking at a market. Then we build back up, start looking for your sign of strength. You get sign of strength right here. Or here, but this would be like the latest point. However, it did fall back down a little bit. So at this point, I wasn't sure if this was going to continue falling or continue. But this, at this point, we got our sign of strength. And here, beautiful entry. And this is what we saw today on 5 different markets. Oh my. Oh my. Oh my. Here, I can go up to 30. Oh, what does this look like? I mean, this was a bad example. What does, I mean, this was okay. This looked like, this, yeah, it could fit. This is a little longer. But you can see some of them are very long. There was a trade on one of them that just turned out so beautifully. Oh my, oh my, oh my. What would this look like on the 5-minute? I'm curious. Yeah, chances are you wouldn't have caught this, but even then it'd be like some entry in here potentially. Let's look at Tesla. I haven't seen that in a good while. I think 4-hour would be good. Yeah, 4-hour, we are in chop. Here, let me go to a cleaner Tesla. There we go. Even if we were looking at the weekly, yeah, we built out of this, then we came back down, reestablished. It was a little bit of chop here. So like this, continue looking here, but then we fall back down, failed to deliver. And we get our sign of strength, ready to continue looking for longs. But at this point, we started doing this. And if we jump down to the daily, for example, it's just going to be chop. At what point would I have stopped looking at the market? We pushed back up and then we fell down. At this point right here, stop looking at the market. Why? We failed to continue delivering. What's this mean? So what I would have done is I would have defined, after we push back down further, look at the size of this range. And I don't even know what happened on. Okay, good. And then, yeah, we pushed down, but it's all still part of this range. So what am I waiting for? Boom, boom. That's it. I'm not touching this. And I remember I was following Tesla all the way up. And then we're done. But Tesla, even looking at it now, it's not that clean. It was clean back here. It's maybe clean here for like a 1-hour follow, perhaps. Probably not even an entry here. Yeah. So probably stay away from Tesla for the time being. That being said, let's continue. So yeah, this is clean. I mean, there's no comment about it, for me at least. Here, beautiful entry here, and beautiful entry. Curious why I highlighted. Oh, probably an entry somewhere in here. Let's go back through. How can I highlight this? We're going to add a little gap here, and we're going to go back up to 30-minute validation, and we're going to see relative to entry where our entries are at. There we go. Entries should take place just on the edge or slightly outside of the, what do you call it? The channel, there's a name for it. We can call it a channel. Containment lines. Yeah. So outside of the containment line, just at, let's see where this entry was at. Just at or slightly above. Entry should take place just at or slightly above. And what does the exit candle of the containment look like? It's going to be bullish. Bullish, bullish. Line that passes through containment should be bullish. with strength. Bullish with strength. Bullish with strength. Right here, I'd probably be waiting for a bullish with strength. And we lost where we were. Right here, bullish with strength. Trying to figure out anything else we might want to keep in mind how the MAs move. Yeah, it's like they get scooped by the MAs. Nothing too serious here. Bullish with strength, then you take your entry. Now, chop. Let's go take a look here. This is the exact same situation as Tesla, right? We had one large range that fell into a smaller range in which we started looking for longs, but then failed to deliver. We're still within this range. We're waiting for a sign of strength. Sign of strength comes in, we're in it again. It's that simple, guys. Especially when now you have 4, 5, 10,000 markets available to you. Immediately, if you see something that doesn't align, throw it away. You got 50,000 others. Well, not really, but you get the idea. And this image right here highlights, for example, this is going to be an important point and one that I do also use within my system. If the 4 hour is somewhat questionable and unclear, jump down to the 30-minute and look for price to sorry, I got a little distracted. Unclear. Jump down to the 30-minute and wait for price to build out of its range. Particularly in the 4 hour, what do you call them? 4 hour retracements or reaccumulations. There you go. So what I'm saying is on the 4 hour, if you look at this on the 4 hour, it's going to be a jump back down to the MAs. It's a reaccumulation. We're breaking down. Now, that's going to be a little questionable. You're going to jump down to the 30-minute and ask yourself, what's actually going on here? And you're going to see chop. You're going to see chop on the 30-minute. So you're going to wait. It's as simple as this. Wait for a sign of strength, and then you're in it again. It's that simple. Because on the 4 hour, it's going to look like a normal fractal reaccumulation or full reaccumulation. But on the 30-minute, you get your sign telling you, hey, money, step back in. Let's continue following it. And then it happens again. Probably on the 4 hour, we're coming back to the MAs. It's somewhat unclear. Jump down to the 30-minute and take a look here. What's actually going on here? It's kind of chopping. Nothing clear. Sign of strength. We're in it. And you get to follow it all the way up, skipping all whatever this is. Okay? Aside from that, I'm not seeing anything too crazy there. Accumulation moment 1, 2, 3, like 4, 5, 6, 7, 8, but a flush down, so accumulation. This is interesting. In some rare scenarios with markets strongly delivering up, consider adding a rule where you can get involved regardless of MB count, only in extremely bullish environments. There you go. So only in super bullish environments, which if you remember STX, we chose it because it was extremely bullish. Like there was no doubt about it. The 4 hour just kept going. So in this scenario, looking at this 4 hour or this 30-minute, notice how far we just keep going. Maybe you consider this a larger flush accumulation, going for momentum break 1, 2, likely going for 3 up here, something like that. So you might want to consider adding a roll where you just continue pushing it, regardless of how price, how many or MBs keep getting built up, right? Okay, well, that's really it. Come back to the MAs. I don't really have anything here. Try to avoid taking entries in markets where the price just rides up MAs. Up the MAs. Look for expansions and contractions. That's important. Like even here, we contract back into that maze, we expand into them, contract, expand, contract, expand, contract, expand. So that's very important. Trying to see if we're missing anything else. Here, this is kind of crazy. Yeah. This is a crazy entry, but once again, we saw it in one of our assets today. Trying to remember which asset it was, but it looked so clean. Yeah, it was something like this. Oh my goodness. Incredible, incredible. 8RR on that guy. Even on this one, we saw, where was it? Yeah, we saw a longer period sell here. Unfortunately, it did go without us. We tried to get in on this, but it just kept going. I was hoping for a pause right here and then to get in. Man, this thing just kept pumping. Even here. Yeah. This is another good example. Long. I mean, it did get a little questionable here, but here on the 5 minute, we broke out. It would have taken a BE on this guy, but it's still within our rule set. Even here. Oh, and you'd be in on this. This is your entry. We'll see how it plays out over time. I'll keep this on here so we can monitor it. But yeah. Oh, what is this? Oh, post market. I got scared there for a second. Yeah. Even here. Another perfect example. Probably a loss or a break even, depending on how you would have managed this, but dang, man. SL right below. Yeah. And I probably would have broken even on this guy. So yeah, probably a break even on that guy. So that's still okay. So this can be a powerful entry. I'm looking at the 4 hour here. Yeah, coming back to that MA is a little uncertain. So you step down here. Beautiful selling. Consistent selling. We need to make that point clear. Okay. Continue on to the next. After that, this is going to be a good one. Oftentimes, because I got to experience this today, let me show you. Oftentimes, a market will follow containment lines, build out without delivering higher, and set up a new set of fractal / interior containment lines. Let me show you what I mean by that. Here, we had this great containment line that came out, but didn't really end up delivering. And we ended up forming another containment line. Now, what that means is, let me show you. I had an example of that today. Even here, oh my goodness. Containment line, I guess it kind of did deliver, but within the height of this containment line to the high of it, we formed yet another containment line. What does that mean? Probably another entry for us. Where is it? Right here. And there you go. Let's go look at another example. Nothing here. Nothing here. There you go. This is the one I was looking for. Containment line gets formed. We don't deliver out of it. It's not like we continue going. We actually come back down. We don't break the low. So this is important. The second set of containment line The second containment line structure must not break the low of the previous. Otherwise, it's considered chop. Important. Important. Because if we break back down here, if this containment line comes all the way down here and breaks this guy right here, for example, that's chop. That is the market literally doing this. So that, it's very difficult. There's so many concepts at play here. So cool. And then, yeah, we have another set right here. Like this is another prime example. Boom, boom. Beautiful entries up. Okay. Likely with strength. Because if we look at the second set, yeah, it came out with strength. Okay. Then we push up higher. Come back to the MAs. I mean, this is just, God, beautiful. So beautiful. Entries are right at the edge. How far? One thing, we'll go back here in a minute after we finish all these, but yeah, there's nothing really to do here. This is just perfection. I'm trying to decide what I need to take note of here. That's a good entry right there. Way late in the game, but if the market's delivering. So what I'll add here is okay. There you go. That's what I was looking for. Same thing. Must only take place in super bullish market environments. Super bullish market environments. Nothing really to write here. Once again, super bullish market environments. Curious where our entries took place here. Looks like right there. Quick thing to add is with it was somewhere up here. And in these environments, you want to see the MAs start to level out just before the areas of entry. That's important. Because if we look at these longer stretches, even if I go to the example today, even in these longer stretches, we want to see the MAs start to level out, and then you can jump down to the 5-minute. 30-minute, we build back out. Oh my goodness. This is just perfection, guys. There's no doubt about it. Look at the system. Look at the system. You guys saw me select these markets live. This is undeniable, like, gonna make you money if you put in the time to figure out how these systems work. We're up 6 RR right now. Incredible. And look, what started happening at areas of interest? MA started going sideways right at the peak of the exiting. Oh my goodness, this is just beyond incredible. I'm so happy. I'm so happy I moved to stocks. There's so much opportunity that, yeah, it's going to take time to screen markets and it's going to suck for a little bit, but there's potential. Okay. Mm. I think here I was highlighting the chop. So once again, let's follow our rule. If price reaccumulates, however, fails to continue delivering and falls back down into a range, stop looking for entries. All right, let's see here. Starts to reaccumulate, fails to deliver down, breaks further down. Couple things here. You can draw a containment line from here to here. However, this is important, and this might add to our edge here. If so these two kind of go hand in hand, the one I'm about to write. This is going to be a good one. Pay attention to this one. If price retraces and starts forming a containment line, breaks through it, but fails to deliver, then likely you'll want to stay out of the market, allowing it room to chop. Hold up. Yeah. Yes, allowing it room to chop, pretty much. Wait for SOS, sign of strength. Okay. Let's go look at other examples. Containment line delivered. However, this rule might impede with the current one we have, which is this guy. Containment line, but fails to deliver. We need to be a little bit more strict with this rule because we have a containment line here. Doesn't fail to deliver. It does somewhat weakly deliver and then creates another containment line. So let's go back down to this example we were just looking at, which is here. If price has a containment line, fails to deliver, and falls below the containment region, then you'll likely want to stay out of the market, allowing it room to chop. Wait for it. Sign of strength. Here, let me delete that period. If you try to draw a containment line, however, price isn't fully contained within it neatly, chances are that selling was not very clear, thus identifying the entry as poor quality. There you go. Not even the entry, the market. As, I wouldn't say poor quality, I'd say not illiquid, because it might be a very liquid market, as as inefficient. Because in an efficient market, the market's going to move cleanly. This does not show efficiency. This shows, hey, we're selling off. Oh, ready to go long. Never mind. Like, there's no efficiency behind this. And at this point that we fall back down, just pause. Wait for a new sign of strength. Simple as that. Then we continue. We push up, form a containment line, move, not with crazy strength, but we don't break below it, and then form another containment line in which we can follow along. Once again, sign of strength comes in after a larger retracement. Come back in. We form this really long. I mean, these are just beautiful. And an entry here. Oh my. Yeah. Beautiful, guys. The systems we've developed here are incredible. Yeah. This is interesting. I don't even, this probably on the 4 hour looks horrible. Okay. This is good though. If we look here, we underwent chop. Why? Well, we were delivering, we fell back down, but price was not clear. Choppy, giant candle, that who knows what it's doing. Probably on the 4 hour. STX in November. Let's go look at this. STX, November. We're probably going to see it here. Yeah, so I assume it was right here. Right here, actually. Jump down to the 30. Yeah, I don't know what this was. Yeah, like what? This thing has me a little perplexed. The only entry I see here would have been something like that. But even then, it's like, what are we doing? MAs are choppy. So probably what... Yeah, I don't even like this. Something about this is just not clean. And remember what we said about the choppy MAs. Very bad indication, so... Sorry about that. Ah, that's interesting. But I was looking at this entry. So if we look at this, even on a 2 hour, 2 hour might be a lot more. Yeah, that's perfect. Yeah, we failed to deliver, broke down, started our ascent up. So if we want to look at the lower tier, we did build out of whatever this was, but then we failed back down even below it. At this point, just stop. So the range that we were looking at that point is this. Then we come back up and it's looking good. Like, yeah, maybe a little bit of opportunity along the way. And then it's like, okay, we form this beautiful containment line, start looking for longs here, falls down below it. This is chop. So we redefine a new chop zone, which is this guy. So maybe shouldn't have been looking for longs here. That's going to be a maybe. If price builds out of a range, we built out of this range, came back in, defined a new range. Yeah, this actually isn't bad. Yeah. So, okay, I like that. So if price builds out, yeah, that's not bad. I like this. And then we probably have some sort of fractal range within here. Yes. So maybe your entries would have had to been right past there. Getting a call right now, so give me a quick second. Stand by. Alrighty, guys. So first of all, let's go ahead and review our rules, which are very important. But on top of that, I forgot something that's very, very important, which I'll touch on here very quickly. So first of all, for entry to enter the market, we must wait for a flush back down to the MAs. That's normal. The flush down must be smooth and contained. That's important. And we'll include here containment lines. Containment lines is just a reminder for me to remember, hey, on the validation, we're simply going to use some sort of smooth selling before we get involved, and only with these containment lines. Now, for clean retracements, generally anticipate 4 to 6 down candles. This doesn't matter too much because it really depends on the type of structure. There we go. For clean retracements, generally anticipate that, and for momentum entries, anticipate 2 candles and only take in extremely bullish market environments. Assume gaps are reasonable. It's okay assuming price moves swiftly afterwards. In some exceptions, we can see price completely break down below MAs and still showing consistent selling, and you can get involved during the price of these moments, the breaking of the consistent selling. So once again, consistent is important here, very important. Now, consider looking at past price action to indicate whether future trades may hold and continue. This is something I've personally noticed from my own testing. Now, I think I had gotten another alert earlier. Well, there you go. This is where you'd be on that one. This is how all trades close for the day, pretty much. Market's about to close here on this candle. Yeah, so we're closed already. Took one loss, like 5-6 winners. Yeah, this is just incredible. Okay. Yeah. If price reaccumulates, however, fails to continue delivering and breaks back down, stop looking. Yep. If price retraces and starts forming a containment line, but fails to deliver, falls below the containment region, then likely you'll want to stay out. Okay. Price retraces, starts forming a containment line, breaks through it, but fails to deliver below and falls below the containment region, then you likely want to stay out. Well, these two are exactly the same thing, these two rules, right? It starts forming containment line, breaks through it, but fails to deliver and falls below the containment region, then you're likely. Price reaccumulates, however, fails to continue delivering and falls back and down into the range. Yeah, these two are the same thing. If you try to draw a containment line, however, price isn't fully contained within it neatly, chances are that selling was not very clear, thus identifying a market that is inefficient. Entry should take place just on the edge or slightly outside of the containment lines. A line that passes through the containment should be bullish with strength. Price, it shouldn't be price. Price that passes through containment should be bullish with strength, yep. If the 4 hour is somewhat questionable and unclear, jump down to 30-minute, yep. Particularly in 4 hour reaccumulations. In some rare scenarios with markets delivering up, consider adding a rule where you get involved, yep. Try to avoid taking entries in markets where price just rides up, that maze. And oftentimes the market will follow containment lines, build out without building a higher strength, and set up a new set of fractal interior containment lines. The second containment line must not break the low of the previous, otherwise it's considered chop. So this rule, I actually want to move to here. Whoa, didn't mean to do that. Forgot how to do this. There we go. So yeah, these two kind of go hand in hand. If we start forming a containment line and fall down below it, you'll likely want to stay out. However, if we build up higher through a containment line and set up a new containment line, then we're going to want to be in it. Final thing to set up. Let's go back up. This is really cool that Notion does this. Let's go back up and figure out, on average, more information about this guy right here. Entry should take place on the edge or slightly outside containment lines. Well, where did this take place? Just on the edge, slightly above. Just on the edge, slightly above. Although, hear me out. Hear me out, guys. This, I'm actually going to screenshot this. This is important because this actually validates one of the rules we just went over. Okay. This market, come on. What is the problem with this market? Well, we have a containment line here. Can we send this to back? There we go. We have a containment. Never mind. I'll use a highlighter. We have a containment line here that gets broken through, fails down, and completely fails down, which is something that we redrew as this containment line. So we have a rule here where it says where is it? It says right here, if price starts forming a containment line, breaks through it but fails to deliver, and falls below the containment region, then you'll likely want to stay out. Okay. So yeah, that kind of breaks with our entire system right here because we have this entry that we had a containment line, broke through it, and then we fell back down. But now we drew this new containment line that kind of fitted to what we wanted to see it fit. And it still ended up working out. So maybe this rule. I guess it makes sense. Here's why. What would have happened if price instead did something more like this and then like this perhaps? Well, then our containment line would go through something like this. And then like here, let me draw it this way. And then your candles just went up a little higher, just a little higher. Oh, that is not a candle. Okay, so I guess this is where this can come in handy. You have one containment line here that got broken through and then fell back down. But then if you try to redraw it, well, you'd have something more like this. And the idea behind containment lines is to get as many highs as possible to see how clean it is. And at that point, this doesn't count. And if you try to draw it this way, that also doesn't count because we're excluding like so much data. So like a least squares regression model of this data would look something like this. And clearly we got an issue with this. So I think this line isn't actually too bad. I'll have to take some thinking and some more testing on my behalf, but I actually want to go back and look at the longer, so like this one, yeah. And then I just want to look at the longer periods that price continued breaking down. So like the long stretches of bearishness, like here. These in particular. These are important. Oh. Dang it. I can't recover it. That sucks. So then we have this guy right here, where if we actually take a look at what happened, we had a containment line here that actually just fell down. So then we rechanged it to something like this. And it still continued being valid. Okay. Like, yeah, technically we did break up from this containment line, but then immediately fell back down. So that would have meant like, hey, new containment line, that's all. So that's actually really interesting. I'll have to think about that, because this one, instead of it just being like this kind of scenario, where the MA started sloping up and, you know, we probably would have taken a long in here. This is going to be... You want to draw a containment line, however. Yeah, I don't know how to feel about this one. If anything, we'll go ahead and make this... Yeah, we'll make this yellow. More testing with those longer style retracements. So we're gonna definitely require more testing. Retirements, retracements. Yeah, we're gonna require a lot more testing. Jeez, this looks awful. Maybe yellow text. Background color that. Yeah, that looks way better. I'm not too sure how I feel about this guy right here. We'll move it to the bottom. Price retraces and starts forming a containment line, breaks through it but fails to deliver below the containment region, then you likely want to stay out of the market. We try to draw a new containment line, but we also have to include the fact that, like, we might be drawing a containment line and it falls further. Like, let's go look at more examples. Because, yeah, here, it's not bad. Let's look at longer period containment lines. Like, even this right here. This isn't bad. Long containment line. I only care about the really long containment lines right now. Like, even right here. No, that was clean. This is even a longer one. Came down below the MAs. Could have been a little sharper right here, but that's okay. Yeah, I mean, we'll do more testing, guys, as things pop up. Now, let's take a look at this. Entry was just at, slightly above. Entry was just at, slightly above. Entry was just slightly outside. Entry was just slightly outside, further up. So here, entry should take... And then price can reach as far as half the containment height for good entry. Okay, what I mean by that is this the containment from high to low. Generally, I can see it reaching about half for it to still be a valid long there. Nothing here. Here it happens right at the low. Here it happens right at the low, or about half for our best entry. Nothing here. Here happens just at the low. Here happens just at the low. Bottom third, pretty much. Here happens like way at the low. Oh my goodness, this is beauty. I love these. Here happens upper third. Interesting. Price may reach as far as half. Yikes. Because this is, yeah, like these entries as high as the containment. Honestly, yeah. May reach as high as the containment region. Yeah, I mean, if you look at these entries, this happened just at the high. About halfway. Don't know where that one took place. About halfway. About halfway, 3/4 of the way up. Down here. Halfway or 3/4. Yeah, 3/4. Down here. I actually missed an entry today. What asset was it? Because on that asset, we actually had a very similar situation. So let me delete, whoop. Let me delete all this. And actually figure out what had happened. It was an asset that actually ended up going without us, and we were looking for an entry. I don't think it was Rivian. No, Rivian gave us a really nice pause. Oh, yeah. Yeah. It was this guy at the very beginning. This guy just kind of took off. What was it? CoGT? Jump down to a 5-minute and I'll show you guys. So here, let me fix up this containment line. So yeah, this is actually perfect. And then it just kept going. Kept going. Kind of paused. No real like pausing here. And then on the 5-minute, we got this guy. But even at that point, that entry would have taken place right here, which is half. Well, I mean, it's down here, so it's still a valid entry per our rules. However, couple things here. We formed another internal, which is valid. That's part of our rules. So if we were like rushing to get into a trade, this might work. And that would be valid within this containment line. So, yep. And I loved, man. Oh man, this is just perfection. Okay. And then, yeah, that's it. That covers it for the 30-minute. Now we are going to move to copy this guy. Entry, 5-minute. And we're going to rinse and repeat for the 5-minute. So let me go ahead, throw a nice little bar in here. And then what kind of header was it again? Come on. Five-minute entry. Entries are going to be interesting because they'll show what they're supposed to look like. So let me go ahead and move all these over for us. And I'll pause this time so you guys don't have to skip or whatever. And then we'll take it from there. All right. Alrighty, guys. So I did end up adding all the 5-minute, but very quickly, what I want to do is I'm actually going to count out the number of 5-minute positions, which is just the total number of entries we took. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, Let me see. So we'll say 25 because I think I overcounted a couple. 25 on a very good market over a period of what market was it? STX. 25 trades from here to here. We will say in 1 year, I think this excludes weekends, maybe not. In a year, about 200 trading days, we got 25 trades in an entire year. So what makes you think 25 divided by 2, we said 200, 300? Doing the math real quick. What makes you think that on a random day, you're going to show up and you're going to catch a trade? On every random day of this, in this case, market, you only have an 83.3% chance of catching a move. So let's take this one step further and measure, trying to figure out how to do this. I know there's a tool to do this. Let me find it. Price range, date range. So from here to here was, what is that, 70 days? We'll go with 70 days. 70 days. And we'll do it again. And then we'll do it again. From probably this guy right here. So that is 70. Here, let me pull out my calculator. 70 plus 40. Okay, 100 plus 110. 14. 124 days. So that betters our odd. 25 out of 124. Times 100, my bad. That gives you a 20.16% chance of showing up to any market that is delivering 20% chance. So one trade a week, effectively, one every 5 days, that you'll show up in a market that is perfectly delivering and you will catch a trade. So let me go here. Summary for data collection, period. Total days were about 300. Total, what was it? Total trending / tradable days. Tradable context, period, was 124 days. And I mean, if you step down to a 30-minute, well, it's going to go down even further, but we're not going that far. And then total number of trades taken were about 25. That gives us a total of 20% probability of getting taking trade in clean context in delivering market. And what was the other one? It was, let me find it. It was 300, I believe it was 8. And an 8% probability of trade, entering trade in delivering market, in overall market. good and bad context. This is psychology building right here to see that there's 300 days of data collection we did. Let me verify that once more. From here to here. Oh, it's like 290 something, right? Oh, 200 days. My bad. That is totally on me. 200 and 124 of those were tradable. So we're looking at 25 divided by 200. Okay, 12.5% probability. Just about half. So this is important, guys. Very important. This will... Well, we'll change this to be an even number. So we can do something like... How many trades were there? 25. Yeah, all good. This is like how you build a mentality for trading. It's realizing that you're going to spend a lot of time looking at it's just this particular market, but keep in mind I'm looking at 20 today, 20 markets. And very few times are you actually going to enter it. You're just waiting for your alerts to go off, kind of how I was today. I sent my alerts in the morning. Throughout the day they started going off, and you guys got a small glimpse into what that looks like throughout the day, but it's very tiresome. You're just sitting there updating your, and especially on the lower 5 minute when you're looking at 15 markets and out of nowhere 4 alerts go off. Well, there's a lot at play there. So what do we have to do now? We have to go to the 5 minute and do our analysis here now. 5 minute entry. Anyway, guys, you have to use Notion. Notion is like, I don't know if they even had this feature, but man, this is amazing. I love it. So we are, I don't like Notion. Just kidding. Keeps jumping down every time I click somewhere. We are going to go through and do some same thing we did here. Sorry about the music. And just collect data about what we anticipate to see. If we would have taken this long, for example, we would have gotten stopped out. So right away, we might set a rule, wait 3 candles before entry. And if a new high gets set that as your entry buy stop. Most of our entries, however, took place outside of this containment region. I mean, I'm looking at a lot more entries in here now within the containment lines. And you get some beautiful entries within containment. Not here, nothing here. No, nothing there. Maybe here. Entry here on the containment. Entry here under containment. Nothing. I mean, you could have gotten that, but way too low. Even here, right on containment, probably a loss. So a lot of our entries will take place outside of containment. That being said, we can start with our rules. We'll do our bullet points to keep it consistent. Most entries will take place just outside of containment following a double MB style entry, which simply means momentum break 1, momentum break 2, or accumulation, momentum break 1. But yes, some some entries, we'll do it out here because we're going to add bullet points under it. Some entries will take place just within the edge of the containment lines. Price should be moving sideways / building above MAs. So what I mean by that is here we have an entry which is within the containment lines, but we're starting to build within it, and we're going sideways with the MAs. What else do we notice? I mean, I don't really have much here. Trying to think. I'm going to write the rules for this particular entry. Entries tend to play out several candles before tapping it. Wait 3 candles before setting order to prevent getting wicked out. Why? Right here. If I would have set an order right here, 1, 2, on that third candle, I would have gotten tapped out. But if I waited till this third candle and then set my buy stop over that high, then you're good. What happened here? 1, 2, 3. Okay, I did wait 3 candles, but this one tapped me out. So maybe 3 to 4 candles. And we'll continue updating this number as we see more data fit whatever variable whatever figure we see fit. Now we might want to set our entry buy stop slightly above. Consider placing entry buy stop slightly above for variability. I don't know what you call that. What else you call that? For volatility. Wickouts. Okay. Well, this was good. I think we got a pretty good idea. Just off of one photo, we were able to get all this. Now let's move on to the next. This one took place slightly outside. Went sideways for 1, 2, 3. Okay, I like the 3 figure. It is okay if it's a little wicky. Once again, we're on the 5-minute, guys, on some random stock. You can't expect perfection here. And you get another entry here. So your high would just be updated to here, and then your low down here. Not that I will take it, but yes. Listed within the 30-minute rules, take note that entries should take place within the containment region height region. What I mean by that is this entire range is containment, so any entry should take place within here. Any moment we step outside of that, we are done. I like this. Some entries, however, may not pause on the MAs, but baseline at their highs, which can be buy stopped. Some entries, however, may not pause on the MAs, but create a baseline at their highs, which why did I say can? Which may be buy stopped. Some entries, however, may not pause on the MAs but create a baseline while MAs continue increasing at their highs. Okay, so in this case, MAs are just sloping up higher. We do create a nice little pause here. Moving on, we come out. Some entries might just be 1 to 2 candles or a larger area. I don't think this is a good thing to consider. Entry buy stop here, entry buy stop here. I'd say stick to the lowest 2 entries. Consider sticking to the lowest 2 entries available. Why? Well, I've noticed that through all these screenshots, I don't think we ever present 3 entry opportunities back to back that all work out. Versus with 2, generally it's the lowest 2, 1, maybe 2. This might have stopped you out, that do end up going. However, some entries might occur within 2 candles. That is something to take note, just as we saw here. I'd love to take this entry, and it's very nice. Okay, but here you have another one. 1, 2, 3. Maybe consider waiting 4 candles. 1, 2, 3, 4. This would have been your buy stop and your low right here, which probably would have stopped you out. And then you get a second entry right here over these highs. So if you get a small range, an entry range that gets created and a bigger candle gets created, well, I'd actually probably have a buy stop right here. So this would be a loss, and then we'd set up a new buy stop right here, another buy stop right here, another buy stop right here, and then you'd be done. 2 to 3 entries, just to account for maybe that potential extra one. Rules for this, not really much. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, I mean, this isn't bad. I like it. It's just about, yeah. I'd even consider a buy stop over these 3 highs, 3 to 4 highs. Or you can do the entire range, or you can do the 1, 2, 3, 4 candles here. Beautiful. Like our rules, 3 to 4 candles, so far so good. Okay. Here in this scenario, we push out. You just have to get used to we'll add a contingency here. If an entry range is building but gets broken by a reasonable high, the new entry should be moved to that high for extra confirmation. So in this case, if we were looking 1, 2, 3 candles set up very nicely, but the 4th swung up, then your entry buy stop will be placed over that high. And on top of that, I mean, we refall back down and then create 1, 2, 3, 4 candles, baseline beautifully, and then that is another entry. Okay. Here, I think we just looked at this guy. Yep. Just looked at these entries. Actually, I don't know what I'm looking at anymore. Maybe a couple of entries within here. Yeah, these are different. We push up. 1, 2, 3, 4, 5, 6 candles you get buy stopped in. We push up. And once again, we have this amazing rule that says some entries will take place. Nope. Nope. Yep. Some entries may not pause on the MAs, but create a baseline. What happened here? 1, 2, 3, 4. On that fourth, we finally burst it out. And the MAs never stopped, never baselined. This could have also been a potential buy stop. Beauty. Here, we break out. We come back down. We push up. Baseline 1, 2, 3, 4. Come back down. Baseline 1, 2, 3, 4. And we're off. So I think 3 to 4 candles. I think 4 candles. We'll set the rule to 4 for now. Wait 4 candles before sending an order. That is waiting 20 minutes, you guys, before even potentially sending an order. 20 minutes. Think about that. That's a long time. So here's 5, 10, 15, 20, 25, 30 minutes of waiting to maybe set up an order. That is going to drive some people insane, to be quite frank with you. We push up. We baseline 1, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. 55 minutes of waiting to potentially get in on a move. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 85, 90. 90 minutes, hour and a half to maybe get a trade that you've been waiting for 2 entire sessions. And just at the tail end of the second session, you might get an entry. Crazy to think about. Some entries may take on a larger range. Larger scoop action, while others may be very constrained and flat. Both styles of entries are valid. Adjust SL accordingly. There you go. What I mean by that is some areas like to come down and then they move up, and this is a good buy stop. Some entries like to come down, move up. I mean, this is a 1, 2, 3, 4 candle pattern right here. So here's another buy stop. It falls perfectly in line, but yeah. We build out. We have our maybe crazy 1 to 2 candle combo, but realistically, 1, 2, 3, 4 candles. This would be your buy stop. 1, 2, 3 on the 4th candle. So I'll do 3 to 4 candles once again, because I keep seeing that pattern of 3 to 4. Sometimes it's 3, 1, 2, 3, and then it's the 4th one that buys you in. Okay. Then we come down. I'm going to zoom in on this so you guys can see it well. We push up 1, 2, 3, but we get a new high within our 3rd candle. So we just update it to that high, 3, 4, and then we're in. Goodness, this is beautiful. Here, we have our nice retracement. And once again, this would be a big stop, but it's that scoopy action, you know? It's this rule right here. We'll have to do some more testing on this because I'm not too familiar. But once again, the bigger scoopy action. And then we come back down. Entry right here. Does that go? There's no way. Yeah. So just at the high of the range of the containment region, which would be this high, you get your entry right here. And it goes. Okay. Here on this guy, we get push up, start baselining, we get a new high. So effectively 1, 2, 3, 4. Set up your buy stop right here. You get tapped in. Hopefully you had set your SL somewhere around here. I'd probably do this all. It goes, you're already at break even, probably get broken even here or down here. Beautiful. Here, we push out of this area, come back down, push up, 1, 2, 3, get buy stopped in on the fourth candle. Then we push up, 1, 2, on the third candle you get bought in. However, some entries may occur within 2 candles. Yeah. 1, 2, that's your baseline, you go. If, only if it's the first few, it's within the first couple of available entries presented. Important, because if you're trying to take a 1 candle break here, that's not the first, like, y'all see what I mean? Let me find a better example. I want like a really trending market environment. I mean, even this one would have worked out. That's crazy. We're far beyond our area, but even this guy right here, yeah. So I guess it comes down to how trendy the market is. Okay. What market were we looking at? We were somewhere up here. Yeah, 1, 2, 3. 1, 2, 3. Oh, this is on the fourth candle, so I don't know where we were at. Yeah, we already covered that. Started to build a high. 1, 2, but got a new updated high. 3, 4. That's your high. Then you come back down. I'm not sure how to feel about this guy. If anything, it should have been this guy, because we push out of the range, we come down, we do baseline to some extent, but either should have been this high or this high. Worked out anyway, but yeah, it should have been this guy. Okay. I think we were here. Yeah, so if you have like the 2, 3 candle setup, I believe it should fall in like very, very early stage, because if you start getting those late game, I haven't done proper testing on it, but something tells me it's not going to turn out very nicely. And then here, when no other opportunity gets presented to you, which low-key reminds me of what asset went without us today. Let me delete all this. Some asset went without us. It was this guy at first. Went without us. So here, if we're looking at the 5-minute, yeah, it just kind of went without us. And then, yeah, I could see this as a potential entry. Absolutely. Why not? Then we fall back down. We start chopping, forming a new containment. We build on out of it. We get, oh yeah, perfect example. Not only do we get this baseline to buy, but we also get the 2 candle combo. The two highs right here, and then we go. Beauty. And that is what it means to go back and look at your trades and create quote unquote random rules behind it. Like these are random rules that I'm getting from just data. I'm finding ways to symbolize this in the English language, which can be as simple as if there's a wick, simply move it higher. That's it. Like that can change. Presented. Wick outs is good. Buy stops is good. Okay. And that's it. Here's a whole system, you guys. Here's my entire system. Literally. Have at it. This is a whole case study that will make you millions of dollars, and it will make me trillions of dollars, hopefully. Now, of course, you're going to have to adjust for time frames and all that, but that's your system, guys. I would take this if I were you and run with it and test it for yourself and change your own rules. And maybe you saw something that I didn't. It's not, I mean, it kind of is rocket science, but a different kind. To the moon. We're going to the moon. Yeah, very powerful stuff here. So what I think I will do next is a whole back test. But with this back test, I am going to figure out what I want to do. How do I want to do this? Yeah, we'll go ahead and apply these rules. Even, yeah, I know exactly what I'm going to do. We're going to go back to these markets because, I mean, the opportunity, guys, the opportunity. We're going to go back and see where we went wrong. Let's go look at our rules here. 1, 2, 3. What happened here? We got a new high. I should have updated it to this high. But at that point, it doesn't make sense. Where was it? If a range is building, entry range, but gets broken by a reasonable high, which that is not a reasonable high, the new entry should be moved to that extra high confirmation. I could have stayed out. Guys. I don't even plan any of this. That just happened to be there. Crazy. The one loss I took on the day was because it didn't match perfectly the other ones, which we'll actually go through and make sure they match our criteria. 1, 2, 3, 4. Like, yeah. Oh, man. I wonder how Dawn played out. And there's the move we were looking at. Oh, you guys, this is a joke at this point. Let me fix this up a little bit. I wanted to get it on this high. And then on the 5-minute, we broke out. We were waiting for a little sideways, but then you also have this guy going sideways on the MAs beautifully. Here, I can even restrict this a little bit to actually hit our highs perfectly. High to high. And that's literally your entry right there. Whatever this is, but we're actually, the reason I'm putting all these down is so we can go back and actually test them. So let me go grab some dinner. What time is it? Oh, dang, it's only 5. Well, I haven't had lunch either. Trying to decide how I want to do this. Let me pause the video here, and then I can start a new video, is what I'm thinking. It'll give me time to go fetch me some dinner. Because, yeah, I only had breakfast today. We'll add a... reminder. I'm trying to remember how to do this. There's like a really cool alert thing you could set up. Yeah, I don't know. We'll do a little call out thing. Alert. Or we can do... data and number 1 of data analysis for stocks has been completed. That's just for me to know to not come in and add to future stuff. So we'll tie all these together. Yeah, we'll do something like this. We'll figure it out. That being said, guys, let me go ahead and take a little break. Alrighty, guys, I'm back. And what we are going to be doing next is we are going to look at all the past trades, all the live trading, and we're going to do a full analysis on every single entry that was presented today. So very briefly, we're just going to list, I don't even think it's necessary to list the asset or the date. Trying to think how I want to do this. We'll go ahead and list it. LLY, and this was on today's date. Today. Why doesn't it show today? Okay, never mind. November 12th, 2025. And the way we're going to do this is we're going to show every image of what it looked like every time frame. And then, yeah, we'll take it from there. Go ahead. And if anything, I'll just bring this a little higher. Oh, my bad. We'll do something along the lines of this guy. Throw it in here. This is going to be our context. We got our context, and we're going to go through our context rules. So context, and we're going to go one by one. Price can previously be below the MAs and build out in a relatively short term. That didn't happen. Okay, move on to the next. Given a longer period channel down on the validation, this can be reflected. It didn't get reflected. Fully delivering market, no sideways at all. Perfect. If a market starts to reaccumulate but falls down, that doesn't fit here. That doesn't fit here. That doesn't fit here. Expansion and contraction to the MAs. Expand, clear, strong delivering market with great expansions and contractions to MAs. And then with retracements back, wait for price to hover over and start building higher. Cleanly moving MAs, no back and forth. Very clean MAs. No back and forth. No back and forth. Straight delivery up. Perfect. Jump down to the 30-minute and see what we're doing here. On the 30-minute, we're going to snap our screenshot here. Something like this. Throw it in here. We'll give it one space there. Validation. Let's see what we have here. Wait for entry, wait for flush back down to the MAs. Did we get that? Yes. Following a clean delivering market. Is this clean? Absolutely. Flush must be smooth and contained. It is, and it is. For clean retracements, generally anticipate 4 to 6 candles, 1, 2, 3, 4, or 3, and 1, 2, 3. For momentum entries, anticipate 2. Assuming the gaps are reasonable, it's okay to assume that price moves swiftly afterwards. In some exceptions, we see price completely break down below the MAs. That doesn't happen, so we don't have to worry about that. Consider looking at past price action to indicate whether future trades may hold. Okay, this is important. Let's go look at past price action, probably even to here, yeah. And that's it. I'd consider that as like past reasonable areas to look for. No entry there, but beautiful entry here. Just textbook, no question about it. Beautiful. Okay, so validation. Oftentimes, the market will follow containment lines without without delivering higher strength and set up for new fractal containment lines without full delivery higher with strength. So with validation, price swiftly and is contained with slow selling back into the MAs. Price bursts out with strength and begins forming a new intermediary containment, which is where entry took place. Perfect. Where did the entry take place in terms of containment? We'll jump back up to 30. Entry took place and actually here we have 2 entries. I totally forgot about that. So we have entry 1 right here. Whoa, this is laggy. We have a lot going on here. Lots of data being processed. Why is it so laggy? Never struggled with that. Never even had that issue. Okay. Probably need to reset the computer. Okay. Price bursts out with strength and begins forming an intermediary containment. 2 entries were presented. 2 entries were presented at both containment regions, just slightly outside of both regions. Okay. Price that broke the containment lines was bullish and strong, which is what we're looking at here. Price should reach as high, yep, for entry. And we can remove that guy. If the 4 hour is somewhat questionable, nope. In rare scenarios with market strongly delivering up, consider adding a rule where you get involved regardless of MB count. Nope. Try avoiding entries in markets. Nope. If the price retraces, start forming a containment line, breaks through it but fails to deliver and falls below the containment region, you'll want to stay out of the market, allowing room for chop. If you try to draw a containment line, however, price isn't fully contained within it neatly, chances are selling was not clear, thus identifying a market as inefficient. And now we move on to our entry. Or entries in this case. 2 beautiful entries. And let me tighten this guy up. Entries are going to look potentially something like this. Entry. Okay, step down to our entry. Most entries will take place just outside of the containment, double MB style. Momentum 1, close enough. 1, going for 2, but internal 2. So 2 entries presented, both fall just outside of containment region. Consider the lowest 2 to 3 entries available. Yeah, that was like the first and the first. Both entries are the lowest potential opportunities. Some entries will take place just within the edge now. Entries tend to play out several candles before tapping in, wait 3 to 4 candles before sending orders to get wicked out. However, entry might occur within 2 candles only if it's within the first. Okay. 1, 2, 3, 4, and 1, 2, 3, 4. Both entries had a minimum of 4 candles of sideways or baseline containment before entry. Perfect. Some entries, however, may not pause on the MAs. Yep. Listed within 30-minute rules. Take note that entries should take. Yep. Some entries may take longer scooping action. Following a somewhat stable baseline with minimal scoop. There you go. Minimal scoop. It did come down, but then immediately built back up. And that's it for this trade. So that took maybe 5-10 minutes to come through and do a full analysis and see how the market was delivering. And then we jump. And we move on to the next market, which is going to be Rivian. RIVN. November 2025. And we start with our context. However, I'm getting kind of hungry, so I might go out and get me some food. Rivian Automotive. Let's see what you got, buddy. We'll do the entire region here. Throw this guy in here. And we shall start with context. How did context play out? I mean, this is just beauty. Absolute beauty. Four-hour. Price can previously be below MAs. No, not really. Given a period, nope. Actually, not quite. Given a fully delivering market, no sideways at all. If a market starts to reaccumulate. Yeah, none of this. Price was previously in a longer period chop. Built out of this chop and what else? With immense sign of strength. Perfect. Great expansion and contraction of in relation to MAs. With no choppy MA action. What time is it? 6:30. Right. Okay. So looking at this guy, yeah, we pushed out and just beautiful delivery. Like money clearly came into this, whatever it was. Okay. Gonna go ahead and change to our validation. Validation. Let's go through our rules. Clear, flush, longer term, flush down to the MAs. Okay. Validation. Very clean. Very well contained. And sorry about the music in the background. Very well contained. Lasted 1, 2, 3, 4, 5, 6. Lasted about 1, 2, 3, 4, 5, 6 candles before containment got broken with good bullishness. There's really no gaps. Oh yeah, there was. Interesting gap down. But yet remained within containment. Interesting. That's something I haven't seen before. We can see price completely break down, none of that. Consider looking at past price action to dictate whether this has potential. Okay, let's go look at past price action. Here, we broke down and we built a new containment, and we broke down actually pretty bad here. So the moment we broke back down, we wouldn't be looking for trades. So we'd be waiting for accumulation out of this range, and then you get containment, containment, containment. So what we would do is jump down to the 5-minute and look at entries here. Beautiful entry. Potentially secondary beautiful entry. 1, 2, 3. Then we built up this new high. Beautiful entry. That's a reasonable high. No entry here. And latest entry. Yo, why is this so laggy? Latest entry would probably be here. Incredibly laggy. Maybe it's because I'm recording plus like 50 different windows open. Okay. History has shown that this asset provides wonderful entries. In rare scenarios, market delivering. Yeah. I didn't do an MB count, but yeah, I should probably test that actually. That is so important. Why didn't I test that before? Wow, okay. Well, that's on me. My bad for not testing that. MB count. Take a 5-minute screenshot. Entry. Now we scroll down to our entry. Took place outside of containment. Lowest entry available. Some entries will take place just within the edge of containment lines. Yeah. How many candles? 1, 2, 3. Entry occurred on do I not know how to spell? Occurred on the 3rd candle. Secondary entry was available with proper 1, 2, 3, 4, 5 proper 3 to 4 candle minimum entry. Slightly above. So what that's saying is if this entry was not met, well, at least there was one above it that was. So it still would have been a real nice runner. Okay. Some entries, however, may not pause on the MAs. this entry did not. Entry did not pause on the MAs. Take note that entry should take place. Yep. Some entries may take a longer scoop action. There was no scoop action. With no scoop action. And that's it, guys. Like, you just do this over and over and over again, and your eyes will start to pick up on, oh, maybe when I go tomorrow to scan a new market, which is exactly what's going to happen, things are going to be a little different. And I'm going to see things that I didn't see this morning. It's the beauty of it. Okay. Rivian, yep. I should probably include the date. November 12th. I can just throw it in here. My bad. What is going on today? There we go. Okay. And the next one we would do is going to be Arcus. November 12, 2025. Right? And this was a beautiful loss. And we'll probably find out why here very quickly. Probably one of the rules that all others met was not met by this guy. Okay. And going for context here. Now, right away, notice this price action versus, let me go to the last 4 hour, this price action. This price action versus this price action. Or let me do this even better. This price action versus this price action versus this price action versus this price action. Loser, or losing, or loss, fail. Okay. That way I just keep tabs on what actually happened in this market. But okay, go back up to context and see why this likely failed. Price was below the MAs and built out. Lack of sign of strength, clearly. Market starts to fully delivering market knows how to, if market starts to reaccumulate but fails to continue delivering and somewhat falls back down, stop following. After the fail of the first up thrust, which is this guy right here, should have stopped looking at the market. Also looks weird. Liquid with lots of jumps and gaps with wicks. Jumps, gaps, and wicks. If you see here, gap, something about this don't seem right. Like giant gap and then all the way down here and then it opens up here. Like something just ain't right about this. $50 MA did catch up, but nothing happened there. Expansion, contraction to that. Yeah. MAs on the way up were pretty choppy and unclean. That's an important one. That is a very important one. They're choppy and unclean. With retracements back and forth, fractals on the 4-hour, wait for price to hover over the MAs. We were hovering and we were moving away. Okay. This market has looked like no other successful market, so would have been better to simply just stay out. Okay. Gonna jump up to 30. Validation. Wait for price to flush down. Here, let me zoom in here so we can look at this very cleanly. Wait for price to flush back down to the MAs following clear market delivery. Yeah, maybe not. Entry here, potentially entry here. Something about this just does not feel right. Take note of how choppy the market is. Sign of strength could have been stronger. And then, yeah, it had potential. The flush down must be smooth. How is this? Flush down was mainly just one large candle instead of consistent algorithmic selling. And for momentum entries, anticipate, yep. With 4 bearish candles. Well, 4 candles. We'll just keep it like that to keep it clean. Assuming gaps are reasonable. Didn't really have a gap there. You can see price completely break down. Below that, MA is still showing consistent selling. You can get involved the moment the price breaks the consistent selling, which we did. Entry took place just outside of containment lines. We can see price completely break down, still showing consistent selling. Yep. Consider looking at price past price action to indicate whether trades would hold and continue. We're going to go and take a look at these regions right now. Valid entry. Just super bad, but they are valid entries. Valid entry. Yeah, this isn't valid actually. And that's it. So past price action, historical price action is quite choppy and no very clean entries. Oftentimes the market will follow a containment line and build out without higher delivery strength. The second containment line of structure must not break the low of the previous, which we're good there. Entry should take place just on the edge, up. If the 4 hour is somewhat questionable and clear, jump down to 30-minute. I think 4 hours is pretty clear. In some rare scenarios with markets strongly delivering up, yep. Try to avoid taking entries in markets where prices just ride the MA for expansion. Yeah. Very quickly, I want to come here to this guy and look at the 4 hour. How do I put this guy away? Hello? There it is. Okay. So selling on the 4 hour, or what was it, 30-minute? My bad. Okay. We are on the 30-minute somewhere. There we go. So yeah, selling consisted of like one candle here, several candles, a couple, a few, several, couple, several, or one, couple, several. One, maybe? One, two, three, yeah, several. Several with a gap, too. Okay, so this is what I'm gonna add here. Assuming gaps are reasonable. Smooth and contained. There we go. That took me a little longer to find, but yes. We need to see consistent selling. Like something like this even would have been good, but we didn't get that. Okay. And yeah, entry took place outside of containment lines, which is good. Historical price action is choppy with no good entries. And then we jump down to 5-minute for, let me make sure I don't miss anything here, but fails to deliver. No, this was all good. Then on the 5-minute, I'm going to finish this one up and then we'll go out and grab some dinner. Go ahead here and grab our beautiful entry. And within our entry, took place outside containment lines. 1, 2, 3. However, didn't meet the minimal candle requirement. So one important thing here is that you have multiple filters. If the 4-hour wasn't clean and you didn't catch that, well, this should have caught it. And that was on me because we hadn't done this testing yet. So we didn't meet the minimal candle requirement of 3 to 4 candles. There was an unreasonable high, so should have canceled or set up or waited for reset up. Okay. Some entries will take place just within the edge of the containment lines up. Entries tend to play out several candles before tapping in. 3 to 4 candles to prevent getting wicked out. Yep. Some entries, however, may not pause on the MAs. These did, for the most part, I'd say. Yeah. Listed within the 30-minute rules. Take note that entries should take place within containment height region. Yep. Some entries may take on a larger scoop. This one didn't really. So all in all, the entry looked good, the entry itself. However, we did miss that one rule. But aside from that, I think this had a lot of potential. Right? Trying to figure out if we're missing anything. Well, we'll save this 4 candles for now. Candles looked illiquid. Doesn't look like the other entries. Like, look at this entry. Notice how it's nice and liquid. Looked illiquid and rather jumpy. Skip these markets going forward. Okay. Guys, this video has gotten quite longer. I'm gonna take a quick break here, but let me draw my awesome line here. And next we are going to be looking at this beautiful market. COGT. COGT. Not January. What am I doing? January, November 13th, 2025? 12th. My bad. And yeah, we will wrap up here, and then I will grab my food, get some delicious food in me, and then call it a night. It's 7 p.m., so I still have a few hours of solid working. I've probably been working, goodness, a little too long today. Probably like 14 hours on the computer since I woke up. 7, 8, 9, 10, 12, 1, 2, 3, 4, 5. No, it can't be that much. Close to around 11, excluding my breaks. So you guys can see how much work I put into all that I do. So gonna take a quick break here, grab my food, and I'll be right back. Alrighty, guys, welcome back. Today is the next day, so the market already opened. We're moving, and actually, Bitcoin is surprisingly sustaining right now. I want to see a huge sign of strength, which was this guy. So I want to see it continue going this way. But what we're going to do today is, first of all, just go through our watch list and look for any... Whoa. Hello there. Yeah. And so this was our trade from yesterday. We're still running. Up 8-9R. Look at Rivian. Rivian is starting to fall. Probably would have taken your partials. And we're actually resetting up for another entry right now. So we'll keep this in the books. I'd set an alert somewhere around here. We had a lot of alerts go off this morning, so we're gonna have to go through and see what's going on here, but looks like this guy completely failed. Arcus, definitely not a good watcher, and we walked through it this video explaining why. So remove it off the list, that simple. This one, I don't like the way the selling came into this. It wasn't clean. Clean selling, not very clean selling. So this is more indicative of chop, likely. We could get something like this, but chances are no. The reason being is the market already had time to deliver. If it had, you know, the strength behind it. And at this point, this kind of selling is just unclear. Like, if anything, I'd want to see something like this. So, give this market plenty of time to figure itself out. There we go. Okay. And then this market probably would have taken a BE on this guy. And we did form some sort of very short pause here. Nothing here for us though. And there we go. We have Lyft having a way better pause than we were anticipating. Yep, same with this company. Ooh, and it lines up so well. Okay, I believe this one we took a beautiful loss on. And this is interesting because we are starting to fail back down. If we fail further down, this is going to be a part of a larger chop. But as of right now, I see this as large chop. We pushed away from it. Somewhat fractal chop, sign of strength, and then I want to see this continue further. Man, my trading view is like so slow. So I'd want to see it recover relatively quickly, like now. Yeah, similar here. We had some sort of chop, broke down below it, intermediary chop. Probably reflected very nicely on the 30-minute, sign of strength, and then we're pushing out higher. I don't like how illiquid it is. If you see all the giant gaps everywhere. And at this point, I actually have to keep all the trades on here for data collection. Yeah, this couldn't be too bad. So I'd set an alert here. Don't like the way this 30-minute was moving prior. Very indecisive, like it's chop. But then we did shape up somewhat nicely. That though, we need to be careful of. On this guy, yeah, we had lots of chop built on out of it. Looking at this 30-minute, we are just going down here for a little bit. So, yeah, I mean, probably an alert. So, we can actually drag our current alert. Once again, very nasty price. Got our sign of strength coming back into the MAs. On the 30, beautiful entry here. Somewhat of an okay entry here or here. We built out of this range. Continued building, didn't break back down. So that's like the only reason we're still partially looking at this asset. And then at this point, we did break back down. So I'd almost want to consider this sideways chop in a way. Actually, no, we're still holding. Still holding from this guy. From lowest point here. So yeah, this could potentially reset up. And we're actually getting something right now. So if we step down lower, it's not bad. Yeah, we're setting something up. I'd probably just draw a line here to come back and look at it. Whoa. Oh my goodness. Yeah, this gap down is insane. I mean, this thing opened here. That's insane. 8 to 10%. Okay. Good to forward test, you guys. Seriously. Okay. Let's continue with this guy, and then we'll go ahead and take a look at our screener again and rescreen for everything. But we'll go ahead and take screenshots of these awesome traits. If anything, I'd like to include a little more data in here. Okay, so we'll go ahead and include our 4 hour. Then here we'll go with our context. Okay. And let's take a deeper dive into what this did. Price gapped up very strong. Following longer term chop. Came back to MAs. I mean, I was in chop for a good while, but 166% out of nowhere. That's pretty good. And then we are missing an MA. Isn't that wonderful? There it is. I'm going to get one more visible. There we go. Yeah, and kind of sucks how we didn't include the 50 in all other screenshots. For some reason, it got lost there, but yeah, we should be using 5, 10, 20, 50, which are just like basic standard MAs, nothing crazy. With retracements back, yeah. And yeah, there's no real back and forth. Yeah, there's really nothing to this. Giant gap up, hundreds of percent up. Like, what else did I include in these? I mean, that's really it. Clearly moving a maze. Yeah. I don't really have many notes for this guy. Now, the 30-minute is going to be very, very good. Validation. So we'll take it step by step. Price neatly flush down to a maze. Built out. Gaps are reasonable, none of that. In some exception, we suppress completely break down. The longer period. And built back up immediately. Consider looking at price action to indicate whether future hold. There really is no past price action to look at. Like, this would have been your past price action. And I believe we did come back and look at this stuff, but we pushed out, supported, held. Let's go take a glimpse here. Entry could have been here. Falls back down. Yeah, there's absolutely no entries in here. So if we go back and look at past price action, goodness, why is this so laggy? What in the world is this shit? What in the... Yeah, this is god awful. Okay, if we go and look at past price action, what the hell? Absolute dog shit. There's no good past history of this market actually delivering. So no good past history of this market delivering in more recent times. So that might be an indication that you don't want to trade this. You never know. And then yep, so this is what we just had. Entry should take place just on the edge. Price that passes through containment should, yep. So bullish on this containment, bullish on this containment. With the 4 hour somewhat questionable and unclear, jump down to the 30-minute, yep. Yeah, on the 30-minute, we underwent this larger flush down. And yeah, I mean, it was clean. We're still supporting the narrative. And as long as we hold probably above this high, this low, we should be good. If price retraces, start forming a containment line, breaks through it, but fails to deliver and falls below the containment region. Yeah, and that makes sense. If we start breaking down below these points, we're going to not want to look at it. But at this point, we are still supporting the narrative. So we can jump down to our 5-minute entry. Take our screen grab here. Entry. Most entries will take place just outside of the containment. Entry took place just outside of containment. In a, what do we call it? In a bull style? I think that's what we had called it. Taking the lowest available entry. Entries tend to play out several candles before tapping in, yeah. So yeah, I made a mistake here. We started building this range, but then got updated to this high. So this high should have been our entry buy stop with our low somewhere around there. Consider placing the buy stop slightly above, yep. Some entries may not pause on the MAs, but create a baseline, which continue moving. Entry did not stop on the MAs, but rather continued growing. Listed within 30-minute rules, take note that entry should take place within the containment height region. Yep. Some entries may take longer scoop while others, yep. That's really it. Trying to figure out what else we might want to consider here. two candle style setup was available within our entry region for a tighter entry. Okay, next. I don't know if this one ended up playing out. It did for the most part. Yeah, it'd be worth throwing it in the data collection. Throw this guy in here. Okay, fuck that. We're looking at CRK January 12th, 2025. Yep. Not January. What am I doing? November. Okay. Context. Give me a second to turn off the heater. It's getting hot in here. Okay. Yeah, I mean, going back up to our things. Price had shown a very strong sign of strength a couple times. Fully delivering market at time of entry. Very no chop and clean action forward, upward. Yeah, look at the MAs. They're just perfect, man. And that's really it. Trying to figure out what else. Price had previously undergone chop. Put in a sign of strength, but failed to continue delivering higher. So price fell back into creating a larger chop zone. Okay, here you go. So what I mean by this is price fell back down. So we built out, holy shit, why is this like, okay, what if we turn off all our, hello, my mouse is up here. Does this make it quicker? No. I couldn't tell you, guys. This is obnoxious. All right, I'll just run with it. Okay. So yeah, price built out of this, whatever chop was, with a, very good sign of strength. But then we fell back down. we failed to continue pushing higher. If it would have come like to here, that would have been fine, but we fell all the way back down to this area. So what this ended up telling me is we're not ready to go. And in fact, we're actually going to create a larger chop zone because this at any point could have continued going between this, and until you get a sign of strength, even equivalent to this, you don't want to be in the market. And that is why this move right here constituted a sign of strength that was relative to the size of this range. That's it. Very simple. Now we jump down to the 30. Gonna delete all this because this is like very slow. I couldn't tell you guys what's going on here. I do like this 30-minute though. I mean, this is clean. Validation. Let's go see what's going on here. Price, how was it moving before? Price was previously building up higher with low MA chop at the bottom, but got very clean closer to the top. You see down here, chop, 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 and then we're clean. Closer to the top. Price was just writing up the MAs the entire time. With minimal expansion and contraction. That's something we might want to take note of. At time of entry, price. How do I want to phrase this? Price flushed down with very clear containment. Yeah, so maybe this wouldn't have been such a clean market. We're going to come here and look at past trades now. After the point of sign of strength, which I'd say is about here. So any entries past here. So even these, this one, nothing, this one. That's it. So if we get any valid entries within here, it is a market worth analyzing and potentially putting risk on. We built out of this guy, really no entry, built out of this guy. If you are ballsy, sure, probably not. Not for me. And then this guy, yeah. I think this, if you go back in the video, I did break down this entry right here, which is what led me to potentially want to get involved. Past price action has demonstrated one previous working trade. Enough validation to take entry myself. Entry should take place just on the edge, slightly higher. Price may reach as high as the containment region. Yeah, I mean, nothing too significant here. And we'll actually go ahead and take our screenshot for this guy. And we'll see how they play out. So what I'm going to do going forward is start a forward testing journal. I think that'd be a very good start entry. Most entries will take a place outside the containment following a double MB. Took entries tend to play out several candles before tapping in. Wait 3 to 4 candles before sending an order. Yep. Fit 3 to 4 candle period before entry. If an entry range is building, gets broken. Yeah, so we didn't fit that criteria. I'm curious if in this one, entry fit 3 to 4 candle period wait time for entry. Good. Some entries, however, may not pause on the MAs but create a baseline at their highs, which may be buy stop. Listed within 30-minute rules. Yep. Some entries may take longer scoop action while others may be very constrained and flat. Entry did go flat on the MAs, while only one candle worked in our favor to create the base. I'm not the biggest fan of this trade. It still worked. And it's not bad. But if we look at, like, this was part of the larger flush, so I guess it was reasonable. But having taken this guy, we had, for example, larger flush, accumulation momentum 1, 2, maybe 3, going for 4. So maybe this isn't a trade you would have taken. Nothing on lift. Nothing on this guy. This is from the day before, which was beautiful. We're going to go ahead and log this guy. But what we'll do is we'll throw it right at the very top. And this is NEM. November 2025. And if anything, I'll replay just so we get to the high of it. $20R out of that guy. That's just bizarre. Goodness, what the fuck? TradingView, fix your shit, yo. I got a really fast computer too. I have a brand new MacBook Pro 16-inch. This should not be slow. It's TradingView. Okay. Context. Price was previously delivering, ended up falling down and building a larger range, which now that I look at this hindsight, we might have some sort of range like this. flushed down and created a chop range below it. However, price ended up putting in a sign of strength. If price continues to fall down again, then the larger, hold up. Okay. If price continues to fall down again, then the larger range what I mean by this is at first our chop was quote unquote here. We built on out of it, but then failed back down. This kind of instantiated our chop to be this within this region. Now at this point we built back out of it. The only concern here is that if we start falling back down, now this is going to be the chop region we're going to be within to likely be distribution, longer period distribution to continue following sells here. This is where things can get a little tricky and where a market can go from this to this very quickly, or a market can go from I mean, this is a bad example because it just flushed down so far. I do want to find an example to show you guys, but we might not get anything. Okay, yeah, I could see this as an example. So we were previously in chop, kind of. Came out of it with the sign of strength, but failed back down. Then this is then the range we're looking at for chop. We put in a sign of strength. We came back down, but not all the way down here, and then continue pushing higher. So this immediately, I didn't even want to look at this as chop because we continued following the narrative that we wanted to see. Now, the moment price would have done something like this, and then maybe like this and this and this, then at this point, this is considered even higher, like this or this, and then this. I wouldn't have looked at this market until about this point right here, until you get out of this area of whatever it is. Because if you continue trying to highlight this as chop and this, and our sign of strength came in, but then you get this, and yeah, it's a recipe for disaster is what I'm saying. So yeah, 4 hour, I think right now is in a reasonable place to continue pushing higher, and I could see some retracements back down and then continuations. But if we continue chopping, then yeah, that's it. It pretty much wraps. Or on the 4 hour. We'll go ahead and do a 30-minute. And we'll go into context. No, validation. On validation, price had moderate selling with containment of 2 to 3 candles. No gaps, so we don't have to worry about that. We can see price completely breaks down. At this point, there are no previous entries because we were in this 4-hour chop. So one thing you can do is you can go back to an environment which was similar to this. So let's say we broke out a chop, let's say here, and we start looking at the market, for example, here. You got your sign of strength and you want to see it continue. So what you would then do is, because this market condition is very similar to this one, you want to know if the market's going to deliver during that previous market condition. So what we do is we come here on our 30 and we say, okay, beautiful containment here, maybe here, here, and held here, selling here, here, here. Probably none of this. Got very, very dirty. Let me find it. Okay, got a few entries here, got stopped out right away. Market closed, so no entry here. Potential entry here. Oh, I don't even see this guy. Entry here, probably a break even. Entry here. No entry here. Why are we being so laggy? Entry here, entry here, entry here, probably a loss or break even, loss, break even, entry, valid, continued running. So at this point, yes, past price action of similar, if none are recently available, go and look at this past market in a similar stage to see if delivery is reasonable. Okay, so no previous entries, no previous immediate entries were available. However, past similar market models made it apparent that it was. Okay. Oftentimes a market will follow containment lines. No, nothing to worry about there. Validation entry took place about a halfway up containment. The 4 hours, if 4 hours somewhat reasonable and unclear, jump down to the 30-minute. Yep, none of that. None of that. MB count, we had a flush, accumulation, momentum 1, going for momentum 2, so we're still early. And none of that. So that was simple. Go ahead and throw on our 5-minute. Entry. Let's see what happened here. This is where selling occurred. We came out of it. Entry 1, entry 2, valid, entry 3, but we fall back down. So this is going to be very good for our data collection. Right outside of containment, 4 trades were immediately available. However, all resulted in a BE or loss. The 5-minute price ended up reaccumulating. Yeah. Then provided the next available entry, which ended up delivering with strength. Entry took place within halfway of the containment region. Bull style entry. Okay. And that covers this trade. Coolio. I can't with this shit. That's today. And that's it. Right? Oh, we're in replay. Uh-oh. I shouldn't have deleted what I just deleted. TVTX? Where did I take my other loss? Did I already cover this one? TVTX? Arcus. No, so I haven't covered this one. All right. Wow, this is not it. Yo, not it. This shows very close resemblance to Arcus. So what I'm actually going to do is throw it right below Arcus. TVTX. November 12th, 2025. And this guy, how did I indicate it was a loss? Failed. Okay. And we see similarities now. Why? Well, look at this 4 hour. Oh my goodness, yeah. Yeah, now I'm starting to see it. Right? And look at this. I mean, I was very zoomed in, but look at this 4 hour. Context. Price building up to entry. MAs were chopping with price showing illiquid movements, gaps, and instability. Okay. Before entry, market reaccumulated and started building higher. No previous clear expansion or contraction into the MAs. Notice how it's such subtle things that will make a difference in your system. Notice this here. Boom, 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 boom. Okay. You see that? What is this? Then you come to Lily. Boom, 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 boom. It's the subtle things, guys. Look at this. Like, what was this? This was our little hint to tell us, hey, don't trade me. You don't want to put your money in me. Yeah. So, very good hint here. That was completely on me. And lesson learned. What happened here? Arcus. If we look at this image, once again, we'll do the same example. We'll start from, I think here, because here it was clear. Boom, 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 boom. So this entry, we definitely should have waited for a stronger sign of strength. Even if I draw this out right here. Sign of strength would have likely been here. Why? Well, we flushed down. We failed to continue higher. We fell back down. That was on me. Yeah. So yeah, at this point, if we actually think about what happened, we pushed up strong. We kind of came back down with a weird gap, which on a 4 hour is kind of insane. We came back down with a wild gap, started building back up. So at this point, I'd say it's somewhat reasonable to continue looking at this market. And then we fell back down. The moment we fall back down, if we look at our 4 hour rule, if market starts to reaccumulate but fails, continue delivering, somewhat falls down, stop following. Boom. Started reaccumulating, started falling back down. Stop following. Likely a start of more chop. Simply wait for a sign of strength of adequate size. Now, at this point, when the candle closed here, I was like, okay, we are starting to push the sign of strength. It's starting to come out. And then it fell back down. So technically, at the time of the trade, it could have been a little more valid than it is right now, but we'll just roll with it the way it is right now. Okay. and TVTX. Where is it? Here it is. Okay. Let me click on this guy. And chances are, if we start failing right here, I want to see this thing go into like a longer period chop for a little bit. We don't know yet though. Clearly moving MAs, no weird back and forth. Yeah. Don't trade this, don't trade this, don't trade this. And it's all a learning experience. That's the beauty of it. You get to learn and you grow and you evolve your system over time. Because these are two very good losses I could have very easily avoided. How can I... Gotta love Notion, huh? There we go. Okay, now we go into validation. Let's go see what happened here. Validation, price had relatively smooth selling. Price had clean selling. Containment entry took place just outside of containment. Longer period style containment. Past entries would have involved this guy and this guy. No valid entries. There were no valid entries in past price action. Consider looking at past price action to indicate whether future trades may hold. If none are available, which none are, technically, we go to past price action and go to, oh, well, there's your hint, guys. Look at this price action. Past price action. You'd have to go to all the way back here, and then maybe you can find, yeah, like what was I doing? Even on the 4 hour. Go to past price action and see how 4 hour There you go. Go to past price action. Does this show any sort of consistency? No. It's like wiki, it's weird, it's abnormal. So even if, let me give you guys the example here. Let's jump down lower to the 30. Does this show any sort of clear buying? Gap, like it builds something, it falls back down, it builds something, it falls back down, builds, falls back down, and then maybe if you randomly decided to buy at this random point in time, then yeah. So there you go with the validation. Let me see what else I can spot here. Overall, I mean, the validation itself wasn't bad. And then we can jump down to our entry, which once again, it just looks nasty. Took place just outside containment. Price is notably choppy and illiquid. DMB style entry. Entries tend to play out several candles before tapping in. Yep. Fit within 3 to 4 candle min requirement. Didn't pause on the MAs. However, built nice baseline. First trade available within reaching outside containment. Okay, that's it. Now let's go ahead and add our, let's go and look at similar 5-minute entries we took. Notice how choppy this was, how weird this was. Let's go to, where's our next 5-minute? I mean, this isn't much better. These two look so similar. They look scarily similar. Yeah. But here it's somewhat nice. These ended up playing out, but this resembles a little bit of that chop. This one was clean. Yeah. So now I have it in the back of my head. Now I have this like cool little database thing with, or way of viewing things. Okay, let me take a quick break and then we'll log this final trade, which I'll actually do right below here as well, because it fits in line with the quote unquote losers. Failed and failed, right? November, what were we? 12th, 2025. Yep. And then we'll go ahead and do this in a quick second. Hang on. Okay, very quickly. I'm gonna go ahead and finish up this final trade so I can finish the video, get it posted for you guys, and then we can get started on the day. I mean, it's already like end of session pretty much, but yeah, I'd like to do a nice little back test forward test on today's price action. But what we'll do, I'd like to get more price action in here. It's okay, we'll just include this. And we'll go back to yesterday's price. If it wants to load for me. There we go. Go up to the 4 hour. This will be good enough. I don't know why it's so laggy. I'm gonna restart the computer after this. But we have this guy right here, Don. Context. Price was previously in a very long chop. Strong sign of strength came in. If we look at past price action, because we want to kind of go off of this new rule, go to past price action in a moment where the market was delivering, and the only pinpoint area I could find was this guy right here. Jesus, this thing is awful. What is this? Okay. What in the world, yo? I'm gonna have to restart the computer. But yes, we did have whatever this was. Bro, what? Keeps getting slower and slower by the minute. So yeah, this was like the only reasonable area where money had come in. Dude. Yeah, this is just incredibly slow. And that was it. So yeah, this was a long time ago, over 3 years ago. Only one period in the last 4 years did price put in reasonable structure to follow longs. During this period, we're going to step down to the 30 and see what price yeah, this is awful. So awful. Okay, we can't do this shit. I'm sorry, guys, but yeah, no. What is going on with TraderMu? This is awful. So yeah, we built out price in the recent sign of strength was visibly illiquid with large wicks. Oh, the fans on my computer kicked on. That never happens. Okay. Go on to the third. I mean, what else do we have to look at? Somewhat clear. Price during this was extremely strong. That's really it. That's all I got. With clean MAs. Then we'll go ahead and do the 30-minute. And this is going to be our validation, my bad. With validation, we have steady retracement with good containment. Flush was smooth, several candles with good longer style containment. No gaps. I want to go back to other 30-minute examples and look at how price looked like before that though. So even in this example, you can see price is stable, stable MAs, unstable here, but stable here. Go to like better examples, 30-minute. Not so stable here, I'd say. Very, oh, that's the 5-minute, never mind. Very, for the most part, stable, clean, stable, clean, unstable, somewhat stable here. Looking at the previous price buildup, very unstable, choppy, and including MAs. Okay. Price completely break down below the MAs for the most part, yeah. No recent trades available. Last trade, actually, if we look at this 4-hour, sign of strength came on this candle. So anything past this candle. So we look at this guy, this guy, this guy, this guy, maybe this guy, and this guy. Let's go see if there's anything good here. Nothing, nothing. Break even or loss, break even or loss, nothing. No trades were previously available. Nothing was clean at all. Definitely not. Definitely. Definitely not a market to trade. Do I not know how to spell? Definitely. I tried that, no? Yeah, none of this applies. Oh my goodness, what is this shit? Yo. This is just messed up. And we had one large flush down. Yeah, I mean, this is reasonable. So we're done with this guy. Containment burst. So at the containment burst, this, yeah, we had plain bullishness. It's just something about this was just not clean. Okay, and then we can go on to the 5-minute. 5-minute, this is going to be simple. Entry. We go here, most entries will take place outside of containment. Entry, or took place just outside of containment. first entry available. Consider sticking to the lowest 2 to 3 entries available. Some entries will take place just within the edge of containment lines. Yep. Price was moving sideways. Price did move sideways on MAs. Build up very nicely. 1, 2, 3. Tapped in on 4th candle, so valid within our 3 to 4 candle rule. Yep. Some entries, however, may not pause. Yep. Listed within 30-minute rules. Take note that entries should take place within the. Yep. Entries may take on a larger scoop action while others may remain flat. Yep. So the entry itself was actually quite nice. However, price was visibly illiquid on entry with some gaps. Okay. And if we go to other examples of good entries, there's no gaps here. Actually, what time frame is this? Oh, yeah, this is the same one. Like no gaps for the most part. On the 5-minute, no gaps, very clean. On the 5-minute, no gaps. Not very clean, but no gaps. On the 5-minute here, no gaps, very clean. I do like this. Not clean at all. So what I'll do is I'm going to take all the lost trades. Actually, we'll keep them where they're at for now, just to keep them chronological and date. But yes, some of these are. Not bad. So yeah, that is the conclusion of this video, you guys. All the rules are broken down right here. One thing I might do is create a checklist with all these items, and before you take a trade, you just go and check off each individual one. So you'd look at the context on your watch list thing. On your scanner, you'd go market by market and make sure, okay, what did this look like? Nope. Oh, this one checked all of them. So then we can continue to the next phase of scanning. Okay, validation, are we forming containment? Is it reasonable? Past price action, how did it play out? All that. And then that could form almost like a funnel of, hey, we're scanning for only the best of the best markets right now. And if we go right now and do the briefest scan ever of live market playing out, nothing. If we sustain this low right here, we're still good to continue following for longs, but at this point we're entering more of a choppy style condition. So we come here and we look at our rule where it says oftentimes the market will follow containment lines build out without full delivery, higher with strength, and set up a new fractal containment line. Well, that's what we're doing right now. The second containment line structure must not break the low of the previous, and that's what I did right here. We must not break that low. Entry should take place on the edge or slightly outside of containment lines, but the moment that we break up off of this guy and then for some reason come back down and just even one body break below here, at that point it's chop for me. So yeah. Other markets, we're also building something here. But yeah, if we fail any further down, this is going to be chop. This guy might break out here pretty soon. Oh, didn't mean to do a sell. Oh, we're in replay mode. That doesn't help. Jeez, what is this? Alert, there we go. And we'll move this higher up. Okay. That being said, guys, thanks for watching. I know it was a long video, but it really breaks down everything we do. So I hope this helps one of you guys. Have a good day and go out and do your wonderful back test. Send me your results. All right, guys. Have a good one. Bye-bye.